You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Hi, I'm Tom Cock. I was at a National Football League game one time, well, more than once, but at this occasion, there was a group of people saying, Jets, 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 Jets. They're referring, of course, to the New York Football Jets team, supporting their team. Team didn't do very well that day. My team won. Leave it at that. But today, a lot of you investors are saying Jets, 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 Jets. What am I talking about? I'm talking about the exchange-traded fund. An exchange-traded fund is like a mutual fund, except it trades during the day. Mutual fund only trades once. That invests in Jets, jets, while actually invest in airlines that operate jets. Now, as we all know, travel is way down this year after the coronavirus really took effect, right? Travel, I think, on the major airlines, somewhere between 5 and 10% of what it was a year ago at this time. Really devastating. Several of the airlines have had to borrow money from the federal government to stay afloat. And I think the word is after September, if things don't start getting better, we may see a bankruptcy among them. We'll see. But it's interesting to see that you investors are saying, wait, the price of those airlines is down further than it should be. What am I talking about? Well, the U.S. Global Jets Exchange Traded Fund held about $30 million in assets in early March, a couple of months ago. Now, almost $1 billion. 30 million to about 950 million. And 62 straight days of inflows at a time, by the way, when mutual funds have seen billions flow out into money markets, right? Market goes down, you sell, you get out. Not the right philosophy, but a lot of you have done that because it didn't look like the world was going to recover anytime soon. I understand that. I do not understand this. 40% of the assets are in Southwest Airlines, Delta Airlines, American Airlines, and United Airlines. Now, those are the same airlines that a guy named Warren Buffett bailed out of when as I said, when the coronavirus really raised its ugly head in March. Buffett said he didn't know when the airlines are coming back, wants his money, took it out, has not gotten back. And there's many people, there's an advisor in Phoenix who's apparently putting his clients into it because he says it doesn't take a lot of extremely sophisticated analysis to recognize this particular sector got sold off in panic, that it's going to come back. Now, nobody knows when it's going to come back. Nobody knows what the industry will look like when it does come back. Do I think people will travel again? Sure. I'm among the people, I'd probably get on a plane today, but I know a lot of others, close friends who have said, I am not getting on a plane until a vaccine for the coronavirus is available, and I've taken it. Not going to do it. Not going to sit there with people that may be sick for a couple hours. Totally understand all of that. What I don't understand is all of you who have piled money into this exchange-traded fund. This is an exchange-traded fund, by the way, that if you put $10,000 in 2015, that's now worth about $7,000. That sounds like a loss of 30%. Year to date, have lost over 50%. Now, it did make some money last year, lost money in 2018. Those are significant numbers, but I think this is the more significant one. Thing called the standard deviation, measure of volatility, right? How much things go up and down. Standard deviation on the JETS exchange traded fund, 32, a little over 32. Standard & Poor's 500, 16. So twice the amount of volatility. And as I said, the longer term return, 5 years. Now I know a lot of this has come this year, down 30%. Should you be putting your money here? Does this make sense in your portfolio, et cetera, et cetera? The answer really is no. But let's talk about the reasons why. First of all, Sector investing is generally the idea that you put your money into a particular part of the economy that you think is undervalued, and you take advantage of that, ride it up, sell it, get into the next one. There are very few people I know that do this successfully, and they do it professionally. And they use some sort of timing method. It's not about their emotions, it's not about what's going on in the news. They actually are looking at numbers. And as a businessman, I trust numbers. I don't know what else I really trust. So sector investing has not been a great way to invest. But I love value investing. This is a value buy, right? You're buying something that is down, and you're hoping that you can ride it up faster than the rest of the market. This is an extreme look at all of that. And as I mentioned earlier, you're making a bet against a guy that the Oracle of Omaha, who is viewed as the greatest stock picker for the last 50 years. Instead, if you own a diversified portfolio, you own these airlines, right? You just own them in a small amount. You're not making a bet on a particular industry. You're not making a bet on a particular airline. So in a diversified portfolio, you already have all of this in it. Could a fiduciary advisor really put you in this? I would argue no, because you're making a bet. It really is a bet. Investing is long-term. This is a short-term speculation that may or may not pay off. And by the way, you want to find out what real fiduciary advice looks like. Join us for our webinar on June 10th, where we're going to look at the bad stuff that goes on in the brokerage industry. I'm betting this is something that people would be pushing because it sounds sexy, and how to get real fiduciary advice. You can register for that at talkingrealmoney.com. So JETS, Jets, may be great supporting your football team, not so great when it comes to investing. I'm Tom Cock.
Talking Real Money.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only.
Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times.
Also, as much as you want it, no one can accurately, consistently predict the future.
So past performance doesn't tell you a darn thing about what the future will bring.
Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities.
Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor.
Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures.
That should keep the lawyers happy.